updates there. Well, let's take the conversation forward. We have Dilip Bhat now joining in on this leg of the show. Dilip, good afternoon. Always great to have you on the show. So banks it is. That has to be our first question, right? Any thoughts on IndusInd, what Abhishek was just pointing out? And of course, this stellar performance from ICICI. I think the debate is around margins. That even if, let's say, margins start cooling off from these high levels, whether banks will still draw incremental money from investors.
Good afternoon. It's always a pleasure to be in front of you all. You know what? I think ICICI Bank really showed the way that everything is really proper, the way they're managing. And I must say one thing, that ICICI appears has seized the leadership of the banking space, which in my opinion was ceded by HDFC Bank. So I think in that sense, ICICI possibly is doing all the right things. And if you see the NIMs, if you see the overall credit growth, even managing the NPAs, I think they have done an excellent job. And as far as IndusInd Bank is concerned, I thought that almost all the parameters, they have probably been behind or lagged behind what the expectations were. Though I have not seen the results in details, but certainly I think it's a little bit disappointing. But having said, on an overall basis, I think in banking, HDFC Bank also has shown a good performance. But operating cost, I think that is going to remain at, OPEX is going to remain at elevated levels, and possibly that will continue. So clearly, I think in the banking space, ICICI appears very decisive, and one should really back it, despite the over ownership in the stock in terms of the domestic as well as the FII investors are concerned. But overall, I think this will really lead the way for the banks and for the Nifty also, hopefully.
So you are positive on banks, and in that ICICI Bank. Let's ask whether you are positive on the insurance space or not as well, Dilip. But in just a bit, because the Reserve Bank has offered HDFC Bank relief on priority sector lending norms and permitted the merged entity, the HDFC entity, to hike its stake in HDFC Ergo and HDFC Life to over 50% before the effective merger date. What this basically means for HDFC Life is that there is the supply overhang which has gone away. What are the brokerages making of this? Surbi joins in with the details. This is Surbi Sutaria. Surbi, good relief coming in for HDFC Life.
Thanks for that. So RBI's decision to allow the merged entity HDFC and HDFC Bank to own over 50% stake in HDFC Life comes as a double booster. Now with this, HDFC Life will become a direct subsidiary of HDFC Bank. Now currently it has around 50% stake in the HDFC Bank channel, which is likely to improve from here on. Also, this will help to reduce their cost of distribution in the HDFC Bank channel, which will in turn help them increase their margins. Also, the possible overhang of a 19% stake sale by HDFC and HDFC Bank, if the RBI had directed to keep the stake below 30%, is now gone. Rather, it is now certain that the merged entity will acquire additional stake before the merger completion. Currently, Aberdeen holds 1.6% stake in the company, and Exide Industries holds around 4% stake in the company. Just to alert, in September of 2022, Aberdeen had sold nearly 2% stake in the company. On the back of this news, brokerages have also upgraded HDFC Life. MK has upgraded the stock from an hold to a buy rating with a target price of 650, and Investec says that the stake sale overhang is now gone, and HDFC Life remains a preferred pick for them among the life insurance players. They have a buy rating with a target price of 560.
All right, and that was one of the biggest gainers today on the Nifty itself. Thanks so much, Surbi, for joining in. Dilip, what do you make of HDFC Life? One would think that maybe for some, who are a little bit skeptical on the growth prospects, I think FY24 is likely to be a flattish year in terms of growth. Would you buy it at around this 550 odd levels? The overhang clearly goes out of the way. The 19% overhang goes out of the way. But at 550, would you buy it? Or would you rather, if you had it and you bought it at earlier levels, would you get out of it?
So, Nigel, I think HDFC Life certainly is one of the better managed companies in the sense, in terms of all the major parameters, they are probably doing pretty well without any doubt. But having said that, certainly this RBI relief is going to remove the immediate overhang of the potential sale threat that possibly was going to happen. But we have seen that in HDFC Life, on and off, we have seen that apart from this sale, I think the promoters have also sold the stock very regularly, or some major investors also sold the stock. So I think that overhang possibly will continue. And even if on a strategy-wise basis, even if HDFC Bank has not to sell this immediately, but if they were to get a suitable price, they would like to definitely offload a part of it and reduce their burden also, which possibly might come in the future. So taking all these things into account, especially the supply side, I think while the immediate threat is not there, it may be in the medium term they will resurface. So I would not be in a hurry to buy HDFC Life from the current levels. Despite, I think, the fundamentals being quite in place, I would rather hold on to the stocks that I have at the moment rather than buy fresh and maybe look for exit, maybe in the near future.
Dilip, do stay on. We need to slip into a mandatory break. On the other side, we'll talk about Tata Consumer. Tata Consumer is up 4.5%. What's the reason for this up move? We'll get to the details of that. And we'll also be joined by Rajesh Kothari of Alpha Accurate Advisors on the other side.